All right, perfect. Let's start. Thank you very much for joining on our webinar, Interoperability webinar, where we try to cover some of the hottest topics in the crypto industry, and we try to give it like a very analytical, data-centric perspective. Today should be super exciting. We're going to be talking about Polygon, um, the new blockchain runtime that is being capturing a lot of headlines and a ton of adoptions, and we're going to be showing you a lot of analytics and interesting perspective about Polygon. The agenda is fundamentally simple. We're going to give a very basic introduction to Polygon and the Polygon architecture. We're going to show you some very interesting Polygon analytics that hopefully will provide a very data-centric perspective into the adoption of this new runtime. And then at the very end, I want to finalize with providing some perspective about some sort of, I call asymmetrical opportunities in Polygon today that hopefully will be making you think about how to take advantage of this new blockchain ecosystem. A couple of logistics aspects before we start. If you have any questions at any given point, feel free to use the Q&A panel. Myself and my team are going to be monitoring that, and I will stop for questions multiple times throughout the session. So don't wait until the end. Feel free to shoot the questions anytime. As we always do in these webinars, before we go into the subject, I would like to give you a quick recap of what has happened with Polygon, with Into the Block in the last 3 weeks. I said Polygon because Brian was asking if I work for Polygon. Absolutely not. So we use Polygon in some of our analytics and quant workloads, but we have no relationship with the company whatsoever. So a quick update about Into the Block in the last 3 weeks. We're closing a quarter in which we added, it's been one of our best quarters ever. We added more than 30 institutional customers for Into the Block analytics. As you probably know, Into the Block has two divisions, analytics and quant services, in which we work with institutional crypto asset managers deploying quant strategies in DeFi. And we have seen this quarter hundreds and hundreds of millions of dollars added to our DeFi strategies. Obviously, for many reasons here, I cannot disclose specific numbers. And in terms of product capabilities, in the next few hours, you're gonna see that release of mining insights, followed by analytics for the Curve protocol, and surprise, analytics for the Polygon platform. But in this last 3 weeks, we launched a bunch of customer integrations. So Bitcoin Basis, that is a crypto portal, Hungarian crypto portal, already incorporated into the block analytics, as you can see there. So did Syncrobit, that is a crypto exchange, and now its analytics are powered by Into the Block. BitLevex, the popular derivative exchange, is it also incorporated into the block analytics, and also Mercury Cash, the wallet. The analytics for the Mercury Cash web interface are powered by the Into the Block platform. As I said before, in the next, literally, we're just hours away for launching a new set of analytics for mining, which is a very hot topic in the industry today. We have done what I consider very solid work in this area, and we're going to be launching those analytics in literally by the end of day today. Should be available in the Into the Block application, and followed by a new set of analytics for the Curve protocol that we have been using very active, as well as some analytics for it's going to be one of the first release for analytics for the Polygon blockchain ecosystem that we have been working on very hard. And today, hopefully, I can show you how that data looks like, although it's not going to be the end product. That's probably an update on our side, and we can probably proceed with the topic of today about providing showing you some insights about the Polygon blockchain. So what is Polygon? I mean, if you're in crypto, you have been seeing a lot of headlines recently about this new projects, from celebrity investments like Mark Cuban to a lot of projects launching in this new ecosystem. So Polygon is it used to be called Matic. It recently rebranded. It's a project that has been around since like 2017, and it's just hard to place into a specific category. The tagline that they like to use is Ethereum Internet of Blockchains, and it was initially conceived as a scalability solution for Ethereum, particularly based on Plasma. So the first implementation of Polygon was based on a Plasma architecture in which, very similar to the Ethereum 2 approach, in which the EVM was modified for enabling Plasma workloads with certain modifications. But it has evolved from there. And at this point, Polygon provides literally sort of a mix of solutions for scaling. Ethereum Plasma being one of them, but also is adding very soon support for different type of rollups, like CK rollups or optimistic rollups. So it's going to be relatively easy to move workloads from blockchains such as Arbitrum or Optimism to Polygon, and it also allows you to launch a standalone sidechains compatible with the EVM. So a way to think about Polygon is a platform in which you can get the best of Ethereum, right? The Ethereum blockchain, and the best of a standalone sidechains that are EVM compatible. And not surprisingly, many people draw analogies between Polygon and Polkadot and Cosmos because of the interoperability capabilities of the platform. But in general, Polygon is very centered around the Ethereum ecosystem, and it's sort of, you can think about it like almost like an Ethereum sister or brother type of platform. When you look at the architecture of Polygon, this has been incredibly well thought out. It's very easy to understand, and it's fundamentally segmented in 4 layers. At the very bottom, we have an EVM and Ethereum compatible layer. On top, some security capabilities for validators, following by some networking, transaction ordering, consensus capabilities, and then a smart contract and EVM integration. So let's break those down one by one. At the very bottom, the very foundation of the Polygon platform is an Ethereum blockchain for a smart contract execution. So there you have capabilities that we all like from the Ethereum platform, such as transaction finality, the possibility of the stake, obviously the dispute resolution, and the ability to message pass messages between different smart contracts. From that perspective, this is a traditional Ethereum layer. On top of that, Polygon builds a validation layer that is, you can completely bypass it if you decide to do so. But the way you should think about this is a network of validators that could check the state of transactions in that Ethereum underlying network for a specific fee, right? And there are entities hosting validators, and you can earn a fee doing that. So the 2 main capabilities of this layer are obviously the validation of the validation network and the ability of managing that group of validators, and the chain formal verification. Then on top of the 3rd layer of the Polygon platform is the network capabilities, and here you have consensus protocols. You have the ability of ordering transactions in certain way, the ability of producing blocks with the transactions in certain order, all those things. And finally, you have the layer that developers see, right? When you're using the Polygon SDK, when you're developing transactions, when you're developing applications for Polygon, you're either interacting with an EVM compatible blockchain, and you're writing EVM compatible smart contracts, and these are the main entry points for the platform. So Polygon has been able to approach the scalability challenges of Ethereum in a way without providing a complete, like a direct alternative to Ethereum 2, right? So they have been able to create this sort of interoperability layer in which all these scalability mechanisms, where you're talking CK rollups or Plasma or sharding or other models, can coexist, and you can scale your solutions today. So not surprisingly, the ecosystem for Polygon has grown tremendously in just particularly in the last year. When you look at the number of projects, recently the Polygon team is claiming over 500 dApps, popular dApps in the platform. Not sure if the number is correct, but what is very true is that it has become extremely popular for two main ecosystems. NFT and gaming has been huge, and there have been a lot of projects launching there, as well as DeFi. That is an area that we spend a lot of time into the block. I mean, we spend a lot of time on that area. So a number of very popular DeFi protocols, such as QuickSwap, Aave, Curve, SushiSwap, and Tidal, and others, they have launched in Polygons with a very strong support and partnership and alignment with the Polygon team. And the popularity has been, the reception has been very strong, particularly because of all the difficulties in the Ethereum mainnet with gas costs and transaction process and block processing times and things like that. So this seems to be an ecosystem parallel to Ethereum that is growing at a disproportional pace, that is getting a lot of adoption, and that developers and investors should be paying attention to. So we're hearing a lot of news, a lot of buzz around Polygon, but how real is the adoption? What I would like to do in the next 10 minutes or so is to walk you through some numbers of the Polygon blockchain and compare that with the Ethereum blockchain. So provide the two perspectives and see what you think. One aspect that I forgot to mention that has been very clever. As part of the Polygon ecosystem, the Polygon team built this thing called the Polygon Bridge that allows you to move funds very quickly between different blockchains and Polygon, particularly Ethereum. So it has been very popular, and that has catalyzed the adoption to new levels, because it's very easy to move funds from DeFi projects, let's say in Ethereum mainnet, to Polygon. And I just remember that because I'm actually going to show you some metrics about the bridge, given that the bridge is a key indicator of how much money is flowing between Ethereum mainnet and Polygon, which is an indicator of investors that are playing in DeFi protocols that are looking for new alternatives on the Polygon blockchain. So let's look at some numbers, and I segmented it into different categories for the sake of clarity, but they're all obviously related to the Polygon blockchain. The first category that I would like to look at is transactions and addresses. So when we look at the transactions on the Polygon blockchain, you can see that they have been not much happened until February or March this year, and then the growth. These are transactions on the Polygon blockchain. The growth has been tremendous, right? So you're seeing the number of transactions already in the millions, approaching like 10 million transactions any given day, and the aggregated curve is literally this is growing exponentially as this curve is showing. Now, how does that compare to the Ethereum blockchain? If you think about it, Polygon was created as a way for Ethereum applications to scale. So we all know that Ethereum has very severe bottlenecks with transaction processing. And when we look at those numbers, even though they have been increasing recently on the Ethereum blockchain, and you can find this data in the Into the Block platform, so borderline 1.6 million transactions, where here we're approaching about 9 million transactions. And this is not lab data, right? These are transactions from real projects operating on the Polygon blockchain. So about a 5x difference between the two blockchains, which gives you an idea of the capabilities, the scaling capabilities of the Polygon blockchain. Now, when we look at addresses that are active in the network, and I just realized that the y-axis was missing here, but you can see the growth is pretty much the same. Nothing happened until March, February, and then the growth have been tremendous to over 100K addresses. Obviously, Ethereum has many more active addresses any given day, but not so much more, right? Like we're talking a different or 4 or 5x that for a young project like Polygon that has way less active projects and DeFi protocols and NFT projects and Ethereum is actually not very bad. So we have fewer addresses processing a disproportionately larger number of transactions. Obviously, there is way more active addresses in the Ethereum blockchain than in the Polygon blockchain. So one metric that we looked a lot into the blog is we tried to segment transactions and addresses and wallets into the specific categories that give us an idea, sort of a more objective idea, better qualifiers about a specific investor. And one of those categories is what we call large transactions. So transactions that are disproportionately large, $100,000, $1 million or so. So I run a quick analysis about the Polygon blockchain, about the number of large transactions that we were seeing. And I think the criteria used here was about 100 ETH or something around those numbers. And you can see that one of the myths about the Polygon blockchain is that it was only for small transactions. And that was sort of true. I mean, let's look at these numbers in January through March. This year, the number of transactions above that 100 ETH mark was very small, but look at the numbers now. I mean, it has completely skyrocketed. Obviously, here we had a couple of incidents in June, just at the Titan incident that helped that skyrocketed the number of transactions. But you can see that the Polygon blockchain is not about small transactions anymore. We're seeing a lot of activity, almost over 35,000 transactions, over 500,000 or so. Now, when we look at Ethereum large transactions, it's around those numbers, right? And this is a way more established network. When you look at the analysis of the number of large transactions, I think the criteria here is 100,000 or so. Is around the 30,000 or a little bit less, so it's comparable, right? So what tells us that whales are also playing on the Polygon blockchain, contrary to popular belief. Then another metric that I would like to drive your attention to is gas costs, right? One of the factors driving the adoption of Polygon was a high gas cost on the Ethereum network, which has fluctuated quite a bit. The incorporation of mechanisms such as Flashbox and MEV pools have sort of addressed part of it, but it's still quite high, has gone back and forth multiple times. So running an analysis on one of the beauties of the Polygon network is that gas costs in US dollars are neglectable. So look at this. So this chart shows you gas costs in Wave and gas costs in US dollars. So if you look at the cost in US dollars, is cents, right? It's completely neglectable compared to what we will experience in other blockchains. So for instance, for us, when we build quant strategies and things like that in the Polygon platform, we're able to take proceeds to execute more regularly because the gas costs are not a factor in Polygon as they are in the Ethereum blockchain, right? So you have a lot more flexibility in terms of execution that what you do on that what you have today on the Ethereum blockchain. Obviously, that's going to be addressed partially with Ethereum too. But this chart is mind blowing, right? When you look at the cost in US dollars are nothing, and you can see the cost in Wei, which is equivalent right now. When we look at the gas cost for Ethereum, you can see the costs have been relatively stable with a couple of spikes here and there, but it's also there are factors, right? You end up paying ridiculous fees for executing very simple transactions, which is always problematic. Then the same goes for fees, right? The fees on the Polygon blockchain, you see the gas costs are very small, but in aggregate, there is money being deployed on the any given day on the Polygon being as a fee, right? Being paid on the Polygon blockchain, and then when we look at Ethereum, comparatively, is way higher, right? Way higher, surpassing over 1 million or a few 100,000 any given day. Whether here in Polygon we're in the 30,000 or so dollar territory, so it's not even comparable in terms of fees and gas costs. Another dimension that is probably worth analyzing is the smart contracts in the Polygon platform. So we look at smart contracts as a sign of developer activity, of projects moving into the Polygon blockchain. And we ran this analysis the other day about the number of ERC20 smart contracts that were being deployed daily on the Polygon blockchain. And look at this, right? It's very neglectable for months. I mean, a few spikes here and there, but on the 10, 9 single-digit territory. And then in the last few months, we have had days with 30, 40, and over 70 new smart contracts being deployed in the Polygon platform. What is this? These are new projects coming in. These are new DeFi Aave coming in, Curve, SushiSwap, deploying all these applications in the Polygon blockchain, which they all come with a large number of smart contracts. But this is a sign of developer activity in the Polygon blockchain, which is by no means small. It's certainly small compared to Ethereum, but is very competitive with all the other blockchains out there, such as Solana, Binance Smart Chain, and others. Then another metric that another set of metrics that I would like to show you are relating to block production time. Obviously, Polygon is very fast and it produces blocks very quickly. But the size of blocks has also been increasing quite a bit, which goes accompanied to the number of transactions that are being processed by the Polygon blockchain every day. So you can see that it was very regular for a few months until April this year, and then it started scaling at a very linear pace, and with a couple of spikes. I'm gonna venture here and think that this is the Titan incident, but you can see that the block size has been increasing and stabilizing on very high numbers. So this gives you, there is nothing worse to see a blockchain with empty blocks, right? So this is a sign of adoption. This is a sign of activity, real transactions being processed with blocks. Look at how small the blocks were at the very early days of Polygon compared to what they are now. This is sites in bytes, by the way. So the last set of metrics that I wanted to show you, some metrics related to the Polygon Bridge. And the Polygon Bridge is this component that is actively being used to move funds between other blockchains, and Polygon, particularly Ethereum, is where the main adoption of this. We are active users of this bridge in many of our strategies, but it's a good indication of funds flowing between the Ethereum blockchain and the Polygon ecosystem. And when you look at the inflows of recent months, they have been off the charts, right? So there is real money being moved in the millions every single day between Ethereum and the Polygon blockchain. And the main use case for this are participants in DeFi protocols in the Ethereum mainnet that are flowing to Polygon to look for other opportunities. And then at the same token, there is money flowing back. So that's the beauty of this bridge, bidirectional. So there is capital also flowing very actively between Polygon, from Polygon to Ethereum. And then one analytic that we like a lot are the balances that are being moved, that are being moved through the bridge every single day. So look at these numbers, right? That's over 250 million or so that are being moved very actively between Polygon and Ethereum. So this bridge remains one of the most popular mechanisms for transferring funds between DeFi protocols in Ethereum mainnet and Polygon, and it is a metric that we pay close attention to, because it's an indication of how much, particularly in DeFi and NFT, how much attention we're seeing on the Polygon blockchain. I would like to, the last part of this session, I would like to highlight, let's say, some opportunities and some ideas of where we think Polygon excels. And I'm going to use some examples from some of the work that we're doing in quant strategies, although for obvious reasons, I cannot disclose a whole lot there. But one interesting aspect that you should think about of why to use Polygon if you're participating in the DeFi ecosystem is because there is a very interesting dynamic today with new protocols that are moving to Polygon, initially for adoption in the ecosystem to avoid high gas costs and things like that, but they're combined with liquidity incentive from the Polygon team in the form of Matic tokens that are sort of, they're being distributed to incentivize adoption of those protocols. But that dynamic, what is happening is that it's creating completely asymmetrical opportunities, because you are now playing in a setting in which you can take advantage of the native opportunities of a protocol like Aave or Curve, combined with additional incentives in Matic, and that generates these proportional opportunities in terms of alpha that are unlikely to remain for a long time, but that today they're very present in the Polygon ecosystem. So if you're an investor in DeFi, this is an ecosystem that you need to pay attention to. So we, as part of our the work that we do in quant strategies, we play with different blockchain runtimes, and Polygon is one that we jump on very quickly. And we have developed a number of strategies that are in production with sizable amounts, and that have performed beautifully well, taking advantage of this dynamic of Matic rewards plus protocol rewards, and some of them have eventually decayed, and we have had to move to other strategies. So let me show you a few examples, and obviously we have to be quite discreet about this for obvious reasons, but to highlight the type of opportunities that we're talking about. So this is a type of a strategy that for the longest time was doing 19% returns in Bitcoin. I tried to get 19% returns in Bitcoin without taking risk, and it's far from trivial with large amounts, right? With a very large amount of Bitcoins, and for the longest time, this was producing over 19% returns for a lapse of 3-4 months. Although that opportunity is no longer there, it has declined quite a bit, but for a lapse of 3-4 months, it was very it was incredibly asymmetrical in terms of returns. The same with opportunities in a stablecoin. This is an opportunity with 38 million in USDC returning 24% return for a large number of months. in a number of DeFi protocols in Polygon. The same with ETH, right? This is a different yield generating strategy that was yielding over 14% returns in Ethereum for a lapse of 3-4 months until this one is actually still there. And this is a position with about 9.5 9,400 ETH. So it's very sizable positions, but these strategies take the advantage of that sort of duopoly between protocol rewards and Matic rewards accelerating those, which is very unique in the Polygon ecosystem today. Is unlikely to be the case in a few months from now. So this is all I wanted to show you today. So Polygon is one of the most exciting blockchain runtimes today. Completely compatible with Ethereum is something you can take advantage today as a developer, as an investor, as a trader. It's been particularly well adopted in areas such as DeFi and NFTs and gaming. Analytics, the analytics that I show you clearly present a perspective of adoption of a fast-growing ecosystem, of a strong ecosystem. And if you're a trader and if you're in DeFi, this is an ecosystem that you cannot afford to ignore, because the number of opportunities that are being created with new DeFi protocols moving into this space is completely asymmetrical compared to other runtimes. So with that, I would like to open for questions. But before that, let me introduce you to the next webinar that we're going to do on July 21st. Our lead analyst, Lucas Altomoro, is going to be talking about mining analytics. So we're about to launch a huge catalog of mining indicators tonight, hopefully. And you're gonna get a deep dive into this, and it's very heavy data science work. So we hope that we think this is gonna be super interesting. It's been very well received in terms of feedback so far. So we think this webinar is gonna be great. The link for the webinar is in the chat, so you can please go ahead and register. It's gonna be super cool. So with that, I would like to open for questions. Felipe is asking, how do you see the future of layer 2 after, I guess, the future of Polygon after Ethereum 2 becomes a reality? So we spend a lot of time thinking about this. It's hard to tell. My personal theory about this, and I'm not sure how many people agree with this, is that they're going to coexist. I think Ethereum 2 is gonna get clocked very quickly, sort of, and there's still gonna be a ton of room for opportunities for blockchains such as Polygon, Optimism, Arbitrum, and others. I'm afraid about liquidity fragmentation. So I think there's gonna be too much liquidity being moved across those ecosystems. So in the short term, it might be fragmented. In the long term, I think they're going to coexist. There is an attendant who mentioned, do you provide analytics or also trading strategies idea? Since you mentioned some strategies into the blog. As I said before, we have a division that all we do is quant strategies for institutions. We don't publish those publicly for obvious reasons. We work with crypto asset managers deploying capital into these strategies. We have done webinars about some of our work in high frequency trading, some of our work on yield, but for obvious, we can only disclose so much in this idea. If you're interested in this topic, shoot me an email. Happy to talk more about it. Alex is saying the main obstacle for non-DeFi companies to offer Polygon integration directly to the clients seems to be the bridge. Yes. Do you know any plans to create an easier way to interact? Yes, the bridge is helpful. It's also a pain in the neck to use. So no, we don't work for Polygon. We don't know what plans do they have. I'm going to assume that as they incorporate interoperability with our ecosystem, they have to improve that bridge solution. But Alex is directionally correct. So it's difficult to use. It requires high developer expertise. Javier is asking, we just saw strategies based on single tokens. Do you operate with token pairs? No, yes, Javier. What you saw is returns based on single tokens, not a strategy based on single tokens. So many of the things that we create use multiple tokens underneath, but we try to maintain a pattern in which you enter a strategy with one asset and exit with that same asset. So behind the scenes, we use many different tokens. Konstantinos is asking, after EIP 15, what will happen to the price of Matic? Will Polygon make the burn a strategy, and how will this affect? So I don't know. Look, like any of these proposals, is hard to predict. What we have seen, practically speaking, is that Matic has been trending in sometimes even negatively correlated with ETH and Bitcoin. Like we were beneficiaries of this in some of our strategies in Polygon at some point, and obviously because the adoption, Matic has skyrocketed and corrected it. Somehow we don't think that's going to be sustainable in the long term. But today there is enough of of both an staking ecosystem, there is enough of a DeFi ecosystem that is likely to maintain prices at certain levels. So it's really hard to tell. And I think I cover all the questions. So if you have any additional questions, feel free to shoot me an email at jr@interoblog.io. I tend to be relatively responsive on email. And with that, I would like to thank you very much for joining, and I hope to see you in 3 weeks in our next ITV webinar. Thank you very much.